Hey everyone, welcome back to MSTR Daily. My name is Matt, and in this video, we are going to talk about the controversial CPI print this morning and what it means for the Fed and other central banks moving forward when it comes to rate cuts. Then we're going to look at a very bullish clip from Tom Lee where he predicts some crazy things for Bitcoin and MSTR over the next year. And to finish off, we have to talk about the groundbreaking prediction that Bloomberg put out yesterday regarding MSTR being added to the Nasdaq 100 and what that could mean for the three types of index flows. But before we get into the video, I just released my Google Sheet tracker for MSTR to MSTR Pro members. So if you want to get weekly market updates and access to my trading portfolio, then check out MSTR Pro in the description below. For our first story, I want to briefly check up with the CPI and the Fed's path forward. This morning, the CPI report came out and inflation rose 2.7% in the last 12 months. Not bad, but also not at the arbitrary 2% target that the Fed has given itself. Now, one thing that is interesting about the CPI print that Tom Lee points out on Twitter is this: shelter finally breaking to the downside. And he is quote tweeting Michael, who points out that the percent change of rent of shelter is breaking to its lowest point since 2021. Now, it's important to mention this because a lot of people miss it when talking about CPI, but it is not measuring the price level. It is measuring the rate of growth or decline in prices. So the rate of growth dropped to the lowest point since 2021, but prices are not back at 2021 levels. Hope that makes sense. Regardless, the Fed has been waiting for OER, owner's equivalent rent, to break to the downside. So now they have data that it is, which is very bullish moving forward when it comes to rate cuts. The market has now pretty much priced in another rate cut at the December 18th meeting, and the market is still unsure about what will happen at the January 29th meeting, but right now the market is pricing in a pause. And if we go all the way out to December of 2025, we see that the market is really only betting on 2 to 3 cuts throughout the entire year. This would give the Fed funds rate a 3 handle, which is definitely better than a 5 we had for most of this year, but it also isn't as low as many were hoping for to help certain prime rate sensitive loans become more affordable. And we just got news that the Bank of Canada just cut rates today by 0.5%. And regardless of what the Fed wants to do, it needs to stay in line with other central banks. Otherwise, the dollar will become too strong, and that is very detrimental to the US economy. So it will be interesting to see how this plays out. But regardless, global M2 is expanding, and I think that US M2 will also expand into next year under a Trump administration with more business growth and commercial bank lending. So either way, money is being printed, which will help Bitcoin and MSTR. Okay, for our next story, we have to talk about Tom Lee. He recently did an interview with Anthony Scaramucci. I don't love his crypto takes, but he had a decent interview here, and Tom spouts some incredibly bullish takes on both MSTR and Bitcoin. Let's start with his Bitcoin price prediction, and then I will show a clip about his take on MSTR. And even though he's bullish on Bitcoin, his take on MSTR is brilliant. So make sure you stay to watch it. Check this clip.
But you are genius level at predictions. Okay, so last time I had you on the show, Bitcoin, it was in the mid 50s to high 60s range. You said we're going to 100,000. I said, when are we getting to 100,000? You said by the end of the year. Okay, yeah. So why did you say that? What did you see? And what do you see for Bitcoin over the next 6 months?
Part of the reason we have stayed constructive on Bitcoin is the price is following closely the prior halving cycles. The halving cycle, for your viewers, is when the block reward gets cut in half. That happened earlier this year. So there's a reduction in new supply. And the sweet spot of that price gain as supply is cut starts to happen towards the end of this year and then into next year. And I think that has supported why we expected Bitcoin to be 100,000. And over the next 12 months, I think something over 250,000 is possible, but maybe highly probable based on just this following this price cycle. The second reason I think Bitcoin has maybe more upside than that is because the new administration has run on a pro-Bitcoin platform. And I think that the possibility of the U.S. not only legitimizing Bitcoin, but making it a strategic reserve asset, I think raises what would be the possible price scenarios for Bitcoin. Because if the U.S. government, as they intend, ultimately gets to 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world. And they'd exert enormous positive influence on legitimizing Bitcoin. And maybe I would just add to that, it's almost like taking a playbook from MicroStrategy, because MicroStrategy has proven that using Bitcoin as a balance sheet asset has really created a lot of value for MicroStrategy shareholders.
Tom is a bull, and he gets criticized for being a hyper bull at times. He did predict a $150,000 Bitcoin by the end of 2024 here. Now, to his credit, he did give the reason for that prediction, and it was due to technical analysis put out by one of his analysts, and unfortunately that did not play out. But the 250K price target next year under a Trump administration seems very, very doable, and honestly, that's kind of my base case for next year. And if we do get that 250K price target, that is incredibly bullish for MSTR. Hear what he had to say regarding MSTR strategy and what Saylor is doing.
Could anything derail MicroStrategy's stock play? What red flag should we watch for? Good question. Lon from Rhode Island.
Lon, I might just need to explain for some other viewers what MicroStrategy is doing. MicroStrategy, around 5 years ago, transformed the company by using its balance sheet. They had a lot of cash on hand to buy Bitcoin. And so instead of the stock being valued on its actual software business, which had been languishing, it's valued as a holder of Bitcoin. But as Bitcoin has risen and MicroStrategy's stock has gone up, it's created an opportunity for them to issue convertible bonds and debt to acquire more Bitcoin. What's been novel is that they've issued these debt securities for almost no interest cost, essentially zero interest bonds. And so they're funding this without having to actually pay for the interest expense. Now, you might think that this is a little bit reckless, but it turns out it's a very novel strategy because they have created a lot of network value. They're one of the largest holders of Bitcoin now, and ultimately they may become the second largest holder of Bitcoin after the US government. And they're doing this with the ability to borrow at very low cost. You might wonder, why are bondholders buying these bonds? They're offering for the first time the ability for someone to put $1 billion of work in the bond world to own a bond that has exposure to Bitcoin. These have been incredibly high-performing bonds. They've been the best performing bonds. So they've helped bond managers outperform by buying typical corporate bonds, but then with this upside in crypto. And so I think that this works unless Bitcoin itself doesn't have a promising future. I think Michael Saylor has not only done something brilliant, but over time, when they do accumulate enough Bitcoin, they're actually going to be able to do quite a lot of novel things with it, whether it's lending Bitcoin or helping some financial system secure Bitcoin as sort of the anchor of that network. MicroStrategy is going to be one of the few companies that has a large holding of Bitcoin that you can actually tap. So it's a very, I kind of applaud the strategy. So I think that there is a lot of upside in what they do, because as long as Bitcoin goes up, MicroStrategy very likely goes up a lot more.
Tom Lee accurately points out that the MSTR convertible bonds are the best performing converts in that $300 billion convertible bond market. And he said something interesting. He says, quote, "This strategy works unless Bitcoin itself does not have a promising future," end quote. And then he accurately thinks past widespread Bitcoinization after they have accumulated the Bitcoin, and says they will be able to put that Bitcoin to use in novel ways to generate earnings for shareholders. Now, we can argue what happens to the multiple to net asset value if there's a bear market, or about future funding from convertible notes if one of them for whatever reason doesn't hit the strike price. But the point is that for right now, it's working, and it's working really well. And talking about working out well, we need to talk about the Nasdaq 100, because yesterday we got big news. James Seyfert from Bloomberg posted a prediction that MSTR will be added to the Nasdaq 100 next Friday. He predicts that MSTR will be the 40th largest holding at a 0.47% weight in the index. And he points out that there are around $550 billion worth of ETFs and index funds that directly track the Nasdaq 100, so that would lead to just under $2.1 billion in initial flows. And I need to say something, because many on Twitter took this as a fact. This is just a Bloomberg estimate. We will get the official Nasdaq 100 announcement on Friday. Now, I would be shocked if they weren't added, but we still don't have the official announcement, and we will know more at the market close on Friday. Eric and James also note that if they are added to the QQQ, their odds of S&P 500 inclusion in 2025 increase. Now, MSTR obviously needs the new FASB fair value accounting changes to go into effect effect in order to be added to the S&P. That's why my standing prediction right now is for June 20th, 2025 S&P 500 inclusion, but we will track that moving forward. And it's probably a good time to remind you guys how impactful index inclusion is for a company like MSTR with their flywheel and accretive equity issuance. I am calling this the index perpetual short thesis. I'm still workshopping the name, but this is the point, and I'm actually going to start at the bottom of this post. There are three types of flows for index funds, and this is what we see on the horizon for QQQ. Number one, initial flows. This is the $2 billion of initial buying we will see for the Nasdaq 100 index, more specifically the index funds in the ETFs that track the index. The second type of flow are passive flows. This comes from future buyers of a Nasdaq 100 ETF where the fund manager then purchases the stock in a market cap weighted fashion. And then the third, the one I'm talking about here, is the rebalancing flows. Now, for most companies, this doesn't really matter and rebalancing is just maintenance, but with MSTR and the above dynamic, this is a real source of future buying because of this reason. Now I'm going to the top of the post. Due to accretive dilution or accretive equity issuance, passive market cap weighted indexes or indices, I'm not really sure, will basically always be short or be low on the number of shares needed to accurately represent the market cap of MSTR in the index. Due to this market dynamic, whenever an index is slated to rebalance, they will be forced to buy more shares of MSTR to accurately demonstrate the market cap of the company within the weighted index. I posted an example a few months ago of this that I will put in the description if you want to see more of an example of how this plays out. Again, this is with all else remaining equal. Markets are complex, but in a nutshell, index inclusion for MSTR just strengthens the flywheel and overall financial strength of the company. So let me know what you think about this index perpetual short thesis in the comments. And with that, if you enjoyed the video, consider hitting the like button and check out MSTR Pro in the description below. Thanks for watching, and I'll see you in the next video.